Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Thursday, the 16th of July. Starting off with Zak Minerals, which currently has quite a few fans I see on Twitter and elsewhere, for those who haven't been hacked. And the current situation here is that we've had the nice solid breakout through the 200-day moving average of 2.32 pence. This looks better than the failures that we've had at the 200-day line from October through to January. And really, that's on the basis of the little sort of bull flag that we've got here, either side of 3p. While we hold above yesterday's support zone and I suppose down to 2.5 pence, looking for further significant upside here, perhaps as high as the top of that rising trend channel from back in November. And as I said, only really back below 2.5 or so pence would really be negative for the stock. Probably if you're going to risk down to the 200-day line, that wouldn't be too bad either. But a target here up to 5.5 pence or even 6 pence over the next month or two for Zak Minerals. Stock which has been covered here many times before and has normally done us proud, or done the bulls proud at least, is AFC Energy, and it's included today off the back of gap to the upside. We had a good gap to the upside in May, although that was filled briefly in the beginning of the month. But shares have bounced back again quite sharply, and we're now left looking to see what the target on the upside may be. Best call at the moment is that we'd hit the top of that rising trend channel from November up to 45 pence over the next 4 to 6 weeks. And that valid especially while we hold above the gap at 25 pence. Maybe if you want to allow down to the 50-day line, currently just under 22 pence, you could do that. But looks as though AFC is on its way again. There is a line of resistance at 29 pence. So if you're ultra cautious, maybe wait for that to be broken on an end-of-day close basis before getting involved. Next stock is actually a requested one, and nice to have something a bit different. It's a rather larger company than we normally look at. Callison, which probably most of you haven't even heard of either, but 1 billion market cap the last time I looked. Hasn't been on the market very long either, so hence the request. Rising trend channel that you can draw from March. Floor of the channel currently at £1.70, so above that we're looking to be, or we're suggesting that we're in an uptrend, and we could hit the top of the channel as high as £2.50. If you're cautious on the stock, maybe wait for a break of that June resistance line around the 188 level, maybe even up to the 50-day line at 191. But we do seem to be in an uptrend channel, and the long argument is in place while above 170. Time frame on the move to the upside would be over the 4 to 6 weeks after the break of that resistance line from June. Another stock which has been covered here on several occasions, and actually, ironically, with less coverage, it seems to be making more progress. There's a lesson in that, I suppose. Previously looking for sort of 10 to 12p as a target here on DevClever. Looks a bit better than that now. I think we can probably stretch the target and the price channel a bit further. You can see that we broke that line of resistance from May around the 7 pence level, and after a little bit of jiggery poker and testing the 50-day line, have started to accelerate to the upside. The view here at the moment is, at least while we're above the initial July resistance at 8 pence, the upside here could be the top of that rising June trend channel as high as 16 pence, and that could be seen as soon as the end of next month, or maybe going into mid-September at the current rate of progress. Stock which I know that some shell gazers have been looking at is one of the cheapest market caps around. Gunsynd sort of goes with the other shells like Trafalgar et al. Over the recent past. But here we've got the shares at the they look to be at the bottom of this rising trend channel. They can draw from January. Floor of the channel at 0.6 pence, and at least while we're above that, looking for more recovery moves here. If you're cautious on the shares, either wait for an end of day close back above the 50-day line at 0.73, or even wait on the February resistance line to be broken at 0.8. But the real value here is to be buying near the recent support area just at or just below 0.6 pence to improve the risk reward. In terms of what the upside could be, initially, obviously, the 200-day line at 0.92. After that, the top of the January trend channel as a best case scenario there, 1.8 pence over the next 2 to 3 months. Next situation, rather easier in terms of the flow from Goldstone Resources. Here you can see a nice solid break of that June resistance line there at around 6.5 pence. While we hold above that on an end of day close basis, looking for further significant upside. Looks a bit like the Dev Clever situation in the sense that above 7 pence here, we could head up towards 15 or 16 pence, which is the top of that February rising trend channel time frame there, the next 2 to 3 months, or hopefully a bit less. Maestrano is next, another stock I've looked at recently, but the candle today, a solid green candle today, looks very compelling in terms of the bull argument. Also gives us a chance to upgrade the potential upside here, so up from 10p to 14p, 14p being the 1 year resistance line projection from last July, not surprisingly enough. As far as the stop loss is concerned, at least while we're above that broken resistance line there from January at around 5.5 pence, we're looking for that 14 pence target over the near term. A lot of chit-chat about the cash pile that NSF is apparently sitting on. I presume that if it was as much as people are thinking, then shares would have gone up rather more than they have, but they have recovered, and looks like we've come back up higher with a bit of bullish divergence. That's really the key, not for me, not the cash that the company has, or ample cash that it allegedly has. So bullish divergence there, a brief bear trap there below 5 pence, which was the former June floor, and at least while we're above the 5 pence area, looking for a move back towards, I suppose, 7-8 pence might be a fair destination to shoot for, given the way that this looks still like quite a tentative situation. But bullish divergence. Best case scenario there, if we can recover properly, would be to hit the top of that that broadening triangle from the end of March as high as 25 pence. But obviously that's a long, long way away, and I think the cash aspect would have to kick in quite strongly for that to be hit anytime soon. That's the next situation is one which I know is a stock which has its fans, Physiomix. Here you can see we've had a consolidation really over the last month or so. Looks like the shares are ready to attempt to break to the upside. That's said on the basis of the break of that, the near-term triangle really that there's been since the middle of June. The view at the moment is that at least while we're above the 6 pence area and the 20-day moving average, we could see a best-case scenario target here as high as 12 or 13 pence, which is the top of a rising March trend channel, quite a broad one on the daily chart. Nice to see also the way that the RSIs remain above 50 since the early June, so the consolidation looks to be a very positive one with a rising 200-day moving average as well. Last stock of the day is a stock which I get occasionally get some stick for. I'm not quite sure why. Wonder why in some quarters, but there was a pullback from my previous call on the stock, which was up to 18 to 20 pence, the top of that rising trend channel from December. You can see that the shares just managed to wiggle out of the channel and wiggle just around the 200-day moving average at 9 pence. But the 200-day line looks to come in as support again for the second consecutive month. It did that in June and several times for July. So I think the downside probing would hopefully be over by now. If you're cautious on the shares, maybe wait for an end-of-day close back above the 50-day moving average. And if you're ultra-cautious, which some people may be, wait for 11.5 pence to be broken. But at least while we're above 8, then looking for 18 to 20 pence here. Ideally, we don't fall back again below the 200-day line at 9 pence, the previous stop-loss zone, over the next few days ahead of a possible move to the upside. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.